Hello everyone, welcome to Elliott Wave YouTube channel. This is Henry. Today is Wednesday, May 4th, and the time is around 1 a.m. GMT. Today we are going to take a look at the Dow Futures YM. We can see this is a short-term chart, 30 minutes. We are looking for uh, an extension higher. So rallying here, as you can see, we ended A, which should be a 5 waves, 1 2 3 4 5, and then we ended the B at 33968 as in A B C zigzag. So now we should be in the C leg, and within the C leg we should also subdivide into 5 waves, which we ended the first wave here, 1 of C over here, and now looking to end the 2 of C. Within the 2 of C we should subdivide into 3 waves, right? So we subdivide into another zigzag ABC in the lesser degree here, and that should then complete the wave 2, okay, before it turns lower again. So for now, as you can see, we have the right side down at 33968, which means we are favoring the downside, and this is the first degree bearish level or bearish key pivot. Okay, so as long as we don't break above 33968, we should continue to see more downside again. Now if we can continue to extend on the upside in the shorter cycle, then technically if you use the extension, then we could see somewhere around 33589, which is the 100% extension of the ABC potentially. This is just a potential target. Okay, if you use retracement, then you will measure the retracement starting from here, because your wave, the wave 2 is correcting this decline here. So you can also see the decline is a clean 5 waves down, and you should be expecting somewhere around since we already passed above the 50%, so if we can continue to extend higher, then perhaps we could be targeting 61.8, 76.4% extension right here before we finish this entire rally, and then starting to reverse on the downside, as long as we don't break above, or as long as this pivot 33968 stays intact. Okay, so now let's take a look and understand a couple of possibilities, all right, which is important for us to come up with some sort of strategy. Now looking at the larger time frame now, daily time frame, all right, now you can see we top out here on January 2022. Since then we have been in a correction, right? In a correction. So you can see that if I draw a channel here, you can see that it broke above the channel somewhere here, right? So what that suggests is that this entire decline is a cycle, is the same cycle, because it's the same channel, it's the same cycle that ended here, and this rally is another cycle. So you can think of this as a 3 waves pullback, ended maybe a W, and this rally is your X, okay, because it break the channel. Now since the rally here, it looks like a 5 waves, right? It looks like a 5 waves here, 1 2 3 4 5. There is also a possibility that there is a flat somewhere here. This is ABC, so some sort of a flat is a possibility here, a running flat in this case, okay, before turning lower. Now in order for this view to kind of gain validation that we are going to extend on the downside, we need to break below this previous low. So if we break below the previous low, that will confirm we got a lower low sequence, and that will suggest we should open more downside to reach the next potential target level, which is this 3,745, 10% lower from where we are. Now if you use this one as your first swing, and then this one is a flat, and this is your second swing, then target is going to be 31,600. But in my experience, usually a round number is like a magnet, so I wouldn't be surprised if we actually go closer to 30,000, because it's a round number, 30,000, right? So it should be attracting the price into that level. Now that is again assuming we can break below in the low. Now the Dow has not done it. However, if you look at other indices or stocks, then it has already done that. So for example, the leader of course is going to be, as always, the high tech, right? So you see the Nasdaq already broke below all this previous low. So this Nasdaq confirms that we're going to be looking to extend on the downside. You can see if I measure the extension now, depending on how you, now again this rally looks like a five-way, so you can argue that this could be a flat ABC. Okay, so if it is a flat, then this is your first swing, this is your second swing, still missing the 100%. If you use the extreme, then it's still even missing a lot lower, right? A lot lower than the downside. Now if you look at the component in the Nasdaq high tech, you can see many of them showing the same incomplete sequence also. Just take a look at a bunch of them. I wouldn't really go through one by one, but a lot of high tech stocks showing similar pattern to the Nasdaq. Okay, now because we are expecting for the downside most likely still in the Nasdaq and so on, we can also conclude that most likely the Dow is going to be doing the same thing, right? The Dow is going to be doing the same thing, and also looking for the downside eventually. Again, at minimum, if there is a flat, this is a 5 so running flat, then at least somewhere here, even though I think it can at least go to the round number around 30,000. Okay, so that is the idea. We're looking for the downside eventually break below this February low is going to confirm the idea that we will see for the downside for the correction in the indices. Now secondly, we want to see what will be the alternates in the shorter cycle, right? Now we have a Fed's meeting, FOMC on Wednesday, widely expected to raise the rate by 50 basis point. No surprise there, right? No surprise. If there is any surprise, then that means they will raise less than expected, like 25 basis point, which actually can cause the indices to rally if there is a surprise like that, even though the market doesn't anticipate that. And also yeah, there should be no surprise. The market has been very efficient discounting, all this hawkish statement by the Fed, right? And looking at the shorter cycle now, there is the possibility. A lot of times, what happens is that the market buys the rumor, sell the news. So once they do raise the rate, then actually you can have a relief rally. In fact, a bigger rally is possible. So in the 1 hour here, we can see that we are expecting a C leg, which is not really a big move. If you look at it, we can go to, let's say, 33,800. It's not overly that big. Even this is a decent rally, right? 33,800 or so. Let me double check again here. 33,600, my bad. 33,600. So this is about 2% rally, not too bad. But another possibility is, let's say if the rally actually starts to get bigger, then another possibility is the Dow ended this cycle here. So in other words, you can see this A and B here, and then we started the C. So let me show you where the A and B that we see in the 1 hour chart and place it in the daily time frame. That is your A and B here. Okay, so the alternate view here suggests that a couple of things, right? Now you can call this a three waves, and it could be ending here as a W. So that means the ABC becomes a lower degree ABC, like this. Okay, and so what's the difference? Well, the difference is then this rally then is going to be correcting this decline. So previously, if you look at the 1 hour, the rally here is this rally is correcting this decline. Going to the daily time frame, the rally, the current count, the primary count, the rally is correcting this decline. But this sort of alternate idea is that the rally is going to be correcting this entire decline instead of just this decline. So then the rally could be a larger degree rally, right? It could be a larger degree rally, and potentially again, if you use retracement, then you do retracement not from here to here, but from this peak to this low, and we can go to, let's say, between 50% to 76.4, let's say, right? Retracement. So potentially can do a larger degree rally into this area, so something like this, so something like this, before it turns lower. Now eventually most likely still gonna go lower, right? Because like I said, the Nasdaq and so on seems to suggest that will be the case. But the shorter cycle, the rally can have two possible options. One is what we are presenting, which is our primary view. This is in fact the most aggressive view. It is basically bearish against this 33,968, and the less aggressive view is going to be correcting larger degree but remains bearish against this one, this peak here, which is the April 21st at 35,413. Regardless, whichever the case may be, whether it is the more aggressive or the less aggressive, most likely after the rally is over in 3, 7, 11 swing, then that rally should fail and then continues to go down again. Okay, so that is the idea for the Dow futures here. And if you do want to get regular updates on stocks, indices, ETF, Forex, commodities, we do have for the index trial, and I will provide the link in the description of the video. See you all again next time. Have a nice day, everyone.